Hey guys, and welcome to Mad Investor. Today I want to talk about why you actually should have a credit card and why you actually should have a highest limit possible. So, in general, what I want to do first is actually kill some of the rumors which people are telling you from like when you're young. First, the credit cards are wrong. Second, taking loans is bad. Third, it will destroy your life. And what I want to just add to it, it might be true. Because if you use a credit card in the wrong way, if you use a loan in the wrong way, yes, it can make your life really hard. But if you know how to use it and you're using that with your mind, and you actually do that for a reason, you realize it's a great tool. So why do I recommend everyone to have a credit card? Like I actually have, I'm just showing you here 5 credit cards, but I have more than 5 credit cards. Like I have few which I also recommend as well. Because at first, having a credit card itself, just your first credit card, builds something called a credit score. So if you don't know what's a credit score, it's, let's say, a score which any financial institution like a bank or a credit guarantor will look at if they would like to give you a loan or a credit card or a mortgage. So, while having your first credit card, you can actually learn how to build your credit score really high. And why would you need a credit score really high? At first, because one day you probably want to grab a mortgage and you want to start living on your own and not start paying for someone else's real estate. So you need to make sure that you have this credit score high to do it. But the problem is if you decide to take your mortgage, like when you started barely right now, you started to build your credit score and you want to take a mortgage immediately, unfortunately, it won't happen. You need actually months or years to build a nice credit score. So what does it mean? You need to build that trust with the financial institutions to actually give you that benefit of doubt. And how does it work? So obviously, choose, let's say if you're in UK, choose any credit card that you can, afford. So what do I mean? I recommend taking the first credit card which doesn't have any membership fees. So, because why should you actually pay membership fees for a card when there are so many options which you can actually have it for free? Why is that? Because the most cards, when you, let's say, have a $5,000 a card. So what does it mean? That means that when the bank gives you the credit card, they give you a credit limit. And the credit limit can be various, and it's depending on your actual credit score. So let's say you start with $1,000. When you start with $1,000, your credit card will be having $1,000. That means you can spend that much money. But at this time, what I always tell to people is when you want to build positive credit history, use maximum 25% of that card. So that means every month use maybe $250 and pay it off. Remember always to pay it off. And that's something which is really important. You need to just write it down. You need to, just memorize that. You need to always pay your credit card on time. This will build your positive credit history. And the more you build it, at some point the credit card providers will tell you, oh, let us increase your credit limits. So they'll increase it from 1,000 to 2,000, from 2,000 to 5,000. And most of the times you can do it every 3 to 6 months. Some small cards, small banks will do every 3-4 months. Bigger companies like maybe like Amex will do every 6 months. So every 6 months you can actually apply for a credit limit increase. And that's something which is really cool because then you're increasing your credit limits. And let's say you have a $5,000 limit and you spend on your daily groceries or whatever you do on a daily basis, $300 to $500. And what will happen is at that time, it will actually build you up on a good and positive credit score. So at this moment, what you need to look at is having your first credit card. And why do I think that you need to have few of those? Because at first, if a bank sees you have a few credit cards, which you can actually manage and always stay within 25% of the usage. So that means if you have $5,000 credit cards and you spend $1,000 on it, that means you're in a good place, and then you pay it off within, let's say, a month, right? It always tells you how much you need to pay. And when you do that, you will actually boost your credit score. In UK, you can do it in many ways as well. Like, for example, you can do it through loans, but many times you can actually find a 0 APR loan, which is literally when you know that you want to buy something, but I'm always telling you want to buy something you can actually afford, and you want to buy, let's say, a new phone, right? You can buy a new phone, but actually you can see that some deals will give you a 0 APR. And what's a 0 APR? That means that you won't pay additional percentage on top of it. That means you'll only pay what you actually own. And that's something you want to look at, because the higher your credit score is, the lower APR you can get. So that means you're paying less interest on whatever is happening. And it will happen the same way in a few years if you want to, take a mortgage. And you want to have your own house, start a family, have your own house, or just move on your own because you're tired of, living with others. Then what you can do is you can apply for that mortgage. And you realize the higher the credit score is, the more chance you'll get it, the more capital you'll get it, and also on a lower APR. That means you will actually pay less money, and only because you will start preparing today. And just to let you know, this video doesn't have any promotional materials. Like, I don't recommend any of those cards. There's no referral links. This is purely informative because I want to make sure that you start your kind of finance journey in a right way. And I know that building your credit score and building that good credit score is really important if at any point you want to start investing, you want to look into real estate, and you will need that mortgage. So what we want to do, we want to prepare you for that option. And the higher score you'll get, the higher chance you'll get that mortgage faster on a much better rate. And also, on the other hand, credit card is a nice way to have a secure as well, because if something happens to your life and you don't hold that much cash, you can always, use it just in case. And that's something which, many times will save kind of your maybe a month, or if your situation will change drastically. It's not something obviously we recommend, but it's always a nice security you will have, which most people don't even think about it. But remember one thing, if you have a $5,000 credit card, and you will use it 100%, so you will spend 5K, that will put a negative impact on your credit score. The same way as paying on like late on any kind of outstanding balance you have. Because people will see, oh, that means you can't manage your capital really nice. And building your credit score is just showing all the creditors and the agencies that actually you can manage your capital and you know how to deal with money. And I hope that this video will help you to build your positive credit score. Guys, if you're in like UK or maybe around the world as well, you can share some of your scores or tips in the comments. You can also share if you have any questions, because I know that some of you will. Maybe you can add some addition to this video to make it even more kind of easier for you to understand. And if you like it, if you like to be, guys, part of the Mad Investor community, just hit that like button, hit the subscribe and a bell. Why am I always telling about the bell? Because if you hit the bell, that means you'll get all the notifications about new and upcoming videos, so you won't miss anything coming from the Mad Investor. Thanks a lot, guys, and see you in the next video.